Why would technology bounce, guys? Ask yourself that question. Why would tech have a big bounce? The answer is the dollar would have to be coming in. Interest rates would be coming in. How would that happen? Fed pivot. Yeah, so I think that right now the market has been pricing in that 75 basis point rate hike. And I think that's why we saw that volatility. Initially, the markets were kind of around that 50 basis points. Then we saw the CPI data last week, and the market really reacted and said, oh boy, now it's definitely 75. So that's what the market's pricing in right now. I think what the important thing to recognize is that 75 is what the market's pricing in, but what the market will move on Wednesday is going to be what the Fed guides going forward. Are they going to say, okay, we're going to stay the course and raise another 75 at the next meeting? Or are they going to say, hey, we might be a little bit more dovish here. Maybe we're going to start to wait and see what the outcome economically is going to be. Yeah, so I do think there's a little bit more downside, but with the downside comes amazing opportunity for swing traders, for kind of shorter term position traders. And so one thing I'd love to show is the chart here of Meta. And one of the levels I've isolated down, there's a huge support level around this 133, 132, and all the way up to about 135. And you can see, again, pivot point here, pivot point right here, all the way back here. So as you see, Meta's had this massive decline. Number one, that gets my attention. I say, okay, Meta may be on sale. Maybe the kind of the emotion is getting too crazy on it. And then I look for those technical levels. So I think the point being here is that, you know, again, who knows where we are December 31st, but if in the next 2 weeks we were to slam into this level on Meta, I would absolutely be saying pick some up, buy a little bit, maybe not a ton, but just dip the toe in the water. And I think there's a lot of tech stocks like this out there that have just been crushed. I mean, your list was very accurate. I mean, AMD, NVIDIA, I mean, all of these type names. In fact, let me go to NVIDIA here real quick and look at NVIDIA's level. It's not that far away from epic support where this consolidation sideways action was going. That's going to be huge support at $120. So it's maybe a little bit more downside. And then I think you start to see some really interesting opportunities into kind of maybe the October, November period. Kind of ignoring the nonsense out there. One of the things that strikes me is a trend line here. I mean, look at this trend line sloping down. So if you're someone who wants to be bullish on Twitter, you need to see a break of this trend line, because what you'll see here is every time it hits the trend line, it gets pounded to the downside. Right. And then it goes back and pounded again. So until that breaks, be very, very careful. But if it does break, then you have a trend line break, a trend break, and you actually could see some upside. And just to talk briefly about NVIDIA, and we talked about Meta before, you notice how as these stocks come into these levels, these technical levels, it's almost a trigger that could tell us that we could be looking at that coinciding with a Fed pivot. And so again, that's not telling us when that's going to happen, but when those levels hit, why would technology bounce, guys? Ask yourself that question. Why would tech have a big bounce? The answer is the dollar would have to be coming in. Interest rates would be coming in. How would that happen? Fed pivot. I do. I mean, I would be so shocked if it was 100. The Fed has been notorious for kind of guiding the market, and the market is telling us 75 is the likely outcome. In addition, I think one of the things that people are forgetting here is that the Fed has started QT in September, which is essentially another way that they're tightening. So even if they do 75 basis points with QT added into it, it's very much the equivalent of 100 basis points. So I think, again, the Fed at most is doing 75. I think they have to be so careful here, because if they, I mean, think about this. The rate hikes that we've seen already in this one, there's a delayed reaction in the economy. And what happens in 3 or 4 months from now when all of a sudden the economy comes crashing down? How does the Fed backtrack? So I think, again, 100 to me is off the table because of QT being in. I'm in the longer term camp, and I think last time I was on it, we talked a little bit about the potential that we could actually see the market go sideways for 10 years, much like the .com collapse did until the NASDAQ took out its highs. And I think that's important to think about, because if you look at how has the market gotten out of every big drop in the last 10, 12, 15 years, and the answer is the Fed has printed us out. Well, now you take a situation where inflation, let's say, is at 4% or 5% in the next year. How does the Fed print us out of that? And I think I'd liken people to take a look at the Hang Seng chart, the Brazilian stock market chart. They had these massive runs around 2006, 2007, and those charts have gone sideways since then, and they have never taken out those highs. And I think that could be what we're looking at, mainly because, again, the Fed, by printing so much money, pulled forward a lot of that upside growth, and now we have to kind of pay for it by this longer consolidation digestion. Yeah, I'm not in the camp that it's very realistic, at least not for a few years. And I think the biggest thing to keep in mind is that the wage pressures. So we've seen oil come down, we've seen a lot of commodities come crashing down, but the one thing that's not coming down is the rising wages. And maybe they're not going to continue to go up, but we've seen from this latest CPI is that even though oil had fallen a lot, it didn't get passed on to the consumer. And I would just remind people to think about, if you're paying your employees double, let's say from $15 to 30 or 20 to 40, you can't raise your product by double to compensate for that. So what you do is you raise it by 10% this year, 10% next year, and you kind of it takes some time to pass that hike along to the consumer. And I think that's going to make this inflation stickier around the 3, 4, 5% range for literally 4 to 5 years before it kind of fully gets digested. Yeah, so I think it's very positive for Bitcoin, and that's kind of one of the things I'm watching for of when that turn in the tide occurs for crypto overall, is when we get into this scenario where inflation stays sticky higher, but the Fed can't kind of be printing us out of that mess. So I think that's where you're looking for that pivot point. I think it probably doesn't come till 2023 at some point, but that would be huge to me. And again, I think that Bitcoin has a ton of upside, and it's going to be the realization that people need the safe havens, that the government is still going to want to stimulate, which is going to be inflationary because the politicians want to get reelected every 4 years. But the Fed maybe can't do what they were doing in terms of printing us out of this recession. So we get stuck in this kind of longer term recession. Inflation kind of holds around 4% for many, many years. And people say, okay, well, where can I put my money? Gold maybe, and also Bitcoin and some of the crypto.